Happy Monday, everybody. I hope everybody had a great weekend. Today is March 7th, 2022, and this is your long-awaited Monday market update. Another busy week in the world and the market last week, and this week is starting off to be pretty busy too. We'll get into that in a moment, but let's recap last week. Again, it seems so long ago and somewhat irrelevant with so much going on, but it's not irrelevant, so let's jump right in. Monday started off the week with a new round of sanctions, crude oil spiking over $100 a barrel, the Russian ruble crashing, and most global risk assets on the decline. Talks between Russian and Ukrainian diplomats, remember that word, diplomats, ended without any material progress, but they did plan to meet again and keep talking. The S&P 500 was down about 0.25%. Stocks did open a little bit lower on Tuesday, then turned positive a little bit as traders were optimistic on talks. This is one of the two terms that I think we'll be watching for. Remember, diplomacy could and hopefully will be what turns this market around. Once you hear significant diplomacy, now I'm not talking about China saying that they want to help, but significant diplomacy, we could see this market scream higher. So Zelensky did demand that shelling stop before they continue talks. Reasonable? No. Then we'll see more of the world's react. Then we did see more of the world's reaction. That this time was 61 Russian companies being removed from their indices. S&P 500 sold off into the close, down 1.5% for the day. Wednesday saw the diplomacy word move markets again. As I mentioned, Russia said that they wanted to keep talking, and Jay Powell, remember him? As we discussed last week, he gave his congressional testimony day one, and nothing new. Good economic data here in the United States, and the S&P 500 did see a rebound of nearly 2% for the day. To no one's surprise, that rebound lasted all of about a minute. As the markets turned down again on Thursday, liquidity and conviction were in short supply. The economic data opened the door again for the stagflation concern. New sanctions, no new talks. The S&P 500 was down about 0.5% for the day. The overnight hours brought one of the most feared words in this whole discussion back to the front. That's nuclear. Now, the good news is it was nuclear as in power and not nuclear as in weapons. The U.S. woke up to the fact that the nuclear power plant in Ukraine, the largest in Europe, had been attacked and caught fire, and the Russians had taken it over. So Friday's other big news, the one that we've been waiting for, the jobs number was a hot number, higher than expectations on the headline, but okay under the surface. The yield curve tightened to one of the tightest spreads it's had since the pandemic low, and the S&P 500 was down about 0.75% for the day. Just to recap how we got here, before Russia-Ukraine, we were watching to see if the Fed, who is admittedly now behind the curve, could lead the U.S. economy to a soft landing. There was little room for error, but this has made it even more difficult with commodity prices exploding higher. Sorry, bad use of the terms. So we'll have to watch closely to see what the Fed's going to do. We will continue to watch for the U.S. economic growth to continue with inflation high, Feds raising rates, and commodity price spikes. We need to see the growth continue. So far it is. We're going to be watching to see if it rolls over. This week's a little bit lighter on the economic news side, not on quality, but on quantity. We will get JOLTS, that's the job openings report on Wednesday, the University of Michigan Consumer Sentiment Report on Friday, and in between, we're going to see that very important number in the economic data, the CPI print for February. Remember, this is all about inflation now, so we're going to see how that goes. We will see commodity prices show up in future CPI numbers, probably not so much in this one. So we'll need to watch out. What we need is the CPI to start showing peak inflation showing up. Powell did make it clear last week, very odd for a Fed chief, that they will see a 25 basis point move in rates at the meeting next week. Now, it will take a lot to get to that 50 basis points. So the bar is pretty high here, but it is 2022, so we'll just have to see how things go. Again, a CPI print over 8%, then it will bring that idea back onto the table. So this morning, we've already seen a whipsaw action in oil, close to $130 overnight, now back below 120, but it's 120. Wow. The price at the pumps, watch out. So you will see some economic activity changing because of this. So we'll just have to see how that goes. On the major topics, let's just summarize. We're watching inflation all this week, and that's going to be huge. We want to see the hint of peak inflation. The other two-word phrase that we could really turn this market into positive is peak inflation. Next week's the Fed meeting, so we'll be watching to be sure that nothing comes out to push that 50 basis point back onto the table. We'll also, of course, be watching Russia-Ukraine, and here's one to look at. Here's one way to look at it. We'll need to see de-escalation, and that'll be first, and we're not seeing that happening yet. Then we'll need a ceasefire, and then some sort of agreement. I'd say we need to look for the diplomacy word to show up, and seriously, there's little hope for that in the markets right now, so hopefully that'll come. There is plenty of other things to keep on the radar, including news from companies and industries, as we always do, and of course, China, Taiwan. As always, I'll keep an eye on these things, and I'll try to keep you informed. If there's another important video to show up, I'll let you know, a special update video. Until then, keep an eye out for Friday's planning video. We'll be in touch with me with any questions you have. It'll probably be too much to ask for a quiet week, so let's just hope we can find some peace somewhere and sometime. Have a great week.